What is equity and why does understanding the term equity matter so much for wealth building? And what are some wealth creation tips that you can immediately use today? Let's look at the following slides. What is equity? First and foremost, equity means you are the owner. For example, you are the owner of specific assets like your business. You are the owner of stocks, you are the owner of real estate, of gold, Bitcoin, Rolex watches, whatever. Another way to define equity is with assets and liabilities. So first, assets are valuable things that put cash into your pocket. For example, stocks pay out dividends. This is cash in your pocket. Real estate, you get the rental income. With Bitcoin, you get the price appreciation. So assets put cash in your pocket. Now, what are liabilities? These are just simple loans. They put cash out of your pocket because you pay interest to someone else. Now, for the definition of equity, it's just that you sum up all of the assets and you deduct the liabilities and you end up with the equity, or in other words, the net worth. So in this example here, we have 500k of assets, we deduct the 50k of liabilities, and we end up with 450k of equity or net worth. That's it. If you like this content, please like the video, subscribe, and also ring the bell to receive notifications when a new video comes up. Also, let me know in the comments which asset you are the equity owner of, or which assets you plan to acquire in the future. So what is the lesson here? Equity means ownership of valuable assets, and equity owners take home the profits of assets. So what is the first wealth creation tip here? You must gain know-how, understand it, internalize it, and then apply it in your real life. It is not enough to just know the basics. You need to internalize them and apply them in the real life to get real results and build your wealth effectively. Let us connect equity from the previous part with wealth in this part. Now, why is equity so essential to build wealth? If we take an employee, for example, an average employee that earns 35k a year in net income and he doesn't own any assets, so he owns no equity, gets a paycheck, he exchanges his time for money, and like this, it's almost impossible to create true wealth. So let's assume he gets a 10% increase in his paycheck. This means additional income of $3,500 per year. That is very little, and it's almost impossible to create true wealth like that. Compared to the employee, let's look now at the investor. The investor owns equity in the form of multiple assets, and he builds his wealth by generating an investment return from those assets. And the upside in wealth creation is really unlimited for the investor. It certainly isn't just 10%. While the employee is exchanging his time for money, the investor is doing things differently. He uses his money to buy valuable assets and become the owner or equity holder of those assets, and therefore the investor is entitled to receive the investment return by appreciation or by cash flow of those assets. In short, the investor's money is making him more money, and he has absolute freedom of his time. Now, how can the numbers look like for the investor, for example? Let's assume the investor has 700k in assets that produce an annual cash flow of 35k per year. Now, if we assume just a 10% increase in the asset price, then we get 70k of additional income, and the total income gets to 105k a year. And that is a massive difference in the wealth creation potential compared to the employee. I am not saying being an employee is a bad thing, far from it. If you're an employee and you earn an income, this is excellent because it puts cash in your pocket and it's the basis for creation of wealth. So if you want to build true wealth as an employee, in addition to your employment, you also must learn how to invest. This is the lesson. Only by learning how to invest, you can accumulate assets which offer the highest investment return potential, and this will effectively create wealth. Now, is it realistic that employees can accumulate assets worth 700k or even 1 million? And this is absolutely possible even for employees with average income. And I proved this in this video. Check this out. Now, what if you are self-employed or a business owner? Should you also learn how to invest? And the answer is absolutely yes. Because at some point, if you're a business owner, you might want to diversify, or you want to sell your business. And then what? You still need to learn how to invest and how to grow your wealth long term. And for this, you need know-how and a clear system. I have created a free 6-part video series called Investing Unlocked. And if you want to learn how to invest and how to build true wealth, how to acquire more valuable assets and build equity, then click in the link below the video in the description and it will bring you to the first video. I wish you the best success with your investing. Thank you and have a great day.